introducing our moderator, Chris Edge, from the town of Berlin, Connecticut, and then he will introduce the panel for discussion. I'd like to thank our sponsors for today, Northmarq, U.S. Pavement Services, Inc., and Champion Elevator. Again, that is me, Rick Kaplan. I am the producer of the webinars and these the live events that we have during the year. I also MC quite a few, also corporate events that I MC. And if you're interested in following me, there are all my social media links. You can also reach me at rkaplan@nerej.com. And there are all of our speakers today. And like I said, our moderator, Chris Edge, will be introducing all of them when the panel begins in a couple of minutes, or a couple of seconds actually now. And if you're interested in joining us for our main Attracting New Development webinar that will be on June 30th, they will be talking about a project that is going on in Westbrook, Connecticut. And that is, I think we got someone that still has their audio on, but that is a project in Westbrook, Maine. And it's quite a fairly large project, and it's right outside of Portland. So that should be an interesting webinar as well. Now I'm going to turn it over to Chris Edge from Berlin, Connecticut, and he is going to moderate the next panel and introduce our speakers.
Thank you very much, Rick. Yes, essentially what I'm going to do is actually the first question itself will kind of give each of our panelists one opportunity. And Rick, if you could do me a favor, just add Matt Pafford. He's also was added to the panel. I know he did not get his face up on there, but if you could, he's actually part of it, has been very instrumental in what we've done as well, if you could. My first question is going to essentially be, could you briefly describe your position and how recent investment in public transportation has played a part in your role, or how it's kind of changed your role? And why don't I get started with Commissioner Lehman, because I know a lot of what's happened has happened through DECD.
Great. Thanks again, Chris, and great to be here and part of the panel. And you'll excuse me, I'm actually at UConn Hartford as part of an offsite today. So if it gets a bit noisy behind me, I apologize in advance. So Commissioner of Department of Economic and Community Development. So for those that some of you know, but briefly what we do is everything related to business retention and recruitment in the state of Connecticut, brownfields, and investments in remediation, very important part of what we do, in addition to arts, culture, and tourism. So DECD touches various parts of the community, everything from workforce to physical infrastructure investments, you know, and we'll talk about many real estate projects, but and probably most topical, I'll give a couple examples of what's happening right now in the past couple of weeks. So first and foremost, there was an announcement about 2 weeks ago that the governor made on the 101 College development in New Haven. So for those that aren't familiar with it, this will be over 500,000 square feet of office space and lab space, some of which pre-leased, some of which is going to be spec, but that's actually going to be built over Route 34 in New Haven. So it's part of the downtown crossing development and rebuilding those communities. So making New Haven much more walkable and much more friendly going over Route 34. Again, Chris, maybe that's not what you had in mind from a transportation perspective, but basically putting communities back together and increasing density is a lot of what we do and where we invest. DECD supported that project in 3 different ways to the tune of, you know, approximately 30 million out of a total $250 million capital structure. Secondly, I'll just mention briefly, the governor is going to announce later this week brownfields investments that we're making, totaling 21 million across approximately 15 different projects. And these are really important monies, as I'm sure many, if not everyone here is familiar with, to remediate and clean up sites where there is kind of higher risk in communities. You know, Chris, we've obviously worked with you guys and Tony here on the project that's happening at the Berlin train station, but making sure that we're supporting infrastructure and supporting cleanup to get our cities back moving again and building again is a key part of what DECD does. And happy to talk about more specific projects as we go. Thank you.
Thank you very much. Next, I'd like to have Brian from Northmarq talk briefly. I know he's in Boston, but I know public transit is essentially part of his everyday. So Ryan, if you could mention a little bit about what you do at Northmarq and how public transportation both works into you day to day, but also in the work that you're doing for Northmarq.
Yes, and so at Northmarq, obviously I mentioned earlier when I was introduced, we're debt and equity placement. A number of our clients are in the midst or have recently developed transit-oriented development projects in and around Boston. I do quite a bit of work in Connecticut as well, from Connecticut originally. And obviously, as anyone who's traveled to Boston in the last 5-10 years is aware, traffic has become a major issue in and around our city. So with the extension of a couple of our MBTA lines outside of Boston, there's been a lot of success in those recent developments, and they're seeing projects that are adding density and scale to communities that fall just outside the city proper that weren't ever really places that people would consider living if they had to work in the city. So with the extension of the Hartford rail line, it's just something that I find to be very exciting. And, we're seeing more and more projects down in Connecticut. And having come from Connecticut, gone to school in Connecticut and worked in Connecticut, big push to get a lot of our, national debt equity sources to reconsider Connecticut. It had been, a gray area on the map, but, more and more are looking for good opportunities, good yield. And the projects that I have worked on there, particularly in the multifamily sector, have had excellent leasing velocity and very reasonable scale. And, what we see up here is a lot of, new households and families that are single car households. So to have rail access so that you only can, have one car and the impacts environmentally that can be are certainly great. And, all the projects that are surrounded in what's going on in Tony's project, I read a little bit about in Berlin. I think that's going to be fantastic. So I'm excited to be a part of it, and hopefully bringing some money to finance some of those other projects going on in Connecticut. So.
Perfect. Well, it's good to know that Connecticut is kind of back on the map again with the financing. I know in a lot of different sectors. I know one person in particular has helped Berlin on the TOD side, which is Matt Pafford from the Office of Policy and Management. Their investments, a lot of it behind the scenes in Berlin, have helped us get to where we are today. So Matt, if you could talk a little bit about your role and maybe some of the different things you've done here in Berlin, just to kind of let people know. I know the Office of Policy and Management, people know OPM, but they don't necessarily know the great things you guys do.
Yeah, thanks, Chris. OPM kind of has its hands in a little bit of everything, but it's usually a background role, which is no different in my role here. Like I said, I've been an analyst there for 7 years. My primary responsibilities are working with the State Plan of Conservation and Development, which is this broad overarching plan that kind of outlines these broad policies that we as a state would like to follow when it comes to development. And TOD obviously has a lot of benefits that fit into the policies in the plan. Generally speaking, any type of state involvement or state investment over $200,000, whether it be for acquisition or development of property or for acquisition of public transportation equipment and facilities, by law has to be consistent with the state plan. So that's one of the things that my unit is responsible for kind of reviewing and overseeing. As I mentioned earlier, we also involved in the environmental review. We have what's called the Connecticut Environmental Policy Act, or SEPA. And so any projects or state actions that could adversely affect the environment have to go through review, typically through our office. And look for alternatives or ways to avoid or minimize those impacts. Again, TOD style development really helps to minimize a lot of those impacts. It's typically in urban areas, it's close to transit, there's housing involved in a lot of cases. So TOD type development in general fits in neatly with kind of the overarching plan for the state. And then, as I mentioned, I personally administer a grant program, which provides grant funding for all kinds of various things that are in line with TOD, and that's how I became involved with Berlin. We had given you guys a series of grants, beginning with a planning grant back in 2015, which I think kind of laid the framework for how we got to where we are today. So never underestimate the value of having a good plan. And then along the way, there were installments of funding for things like property acquisition, brownfield remediation from DECD, DOT had funding involved, and DEEP had funding involved. There were some other funds through different programs through OPM that went towards the broader neighborhood, sidewalks, facade improvements. So as much as we're here today to talk about Berlin and perhaps this, specific development, the town of Berlin really did a great job in laying out a framework with that plan, and then pushing for the development of these parcels in this development, but also kind of reaching out to the broader community, the broader neighborhood, to make improvements that really put that Kensington, the whole area, on the map and allowed it to grow in the way it did. And, I, for one, am happy to be a part of that.
Well, the partnership has been tremendous. And again, as you said, OPM, ECD, I mean, I think we just are in the process of our 40 or 45th facade project over the last 6 years I've been here, which were OPM monies that we had used through STEEP and through the connectivity or the other program. And it's been tremendous because it helps to take the private sector monies with the state monies and make them go further. Arosha, if you could mention briefly kind of your role. I know you have not been in Berlin for a long time, but I know a lot's happened in the time you have been here, particularly on the commercial real estate side.
Yeah, so I think what is critical here in Berlin, when I walked in, it was not that there are funds available, let's go build something, right? I look back and look at the 2013 POCD, the Plan of Conservation and Development that Berlin did in anticipation of the commuter rail service on the New Haven to Springfield line. So it nicely fitted in with the town's vision. I think it's really critical that you have that lined up so that your town council, the Board of Finance, Planning and Zoning, residents, and also the town staff, they are behind this project 100%. It is truly a partnership. I call it a partnership, and it's not transactional. It can be transactional, working with your developer or with the state, where you say, I give you this, in return you give me back something else. Things happen, COVID happens, nobody planned for this, and we need to be flexible, agile, adjust, shift, and the state has been really phenomenal in that way. There are things they genuinely know that we didn't know, especially working with brownfields remediation and other things. You never know what you're going to find when you dig a hole in Berlin, and I'm sure that's pretty same in other towns as well. But having that relationship and the partnership to work through any problems that you might encounter, and having that trust factor has really helped. Now, not every town is fortunate like us to have a rail track going right through the center of town. Berlin, most of you know, it's the geographic center of Connecticut, has two major highways, 91 and 84 intersection with Route 9. So that all helps nicely, but it is part of a bigger plan that everyone sort of bought into in 2013. And you could see nicely how things are lining up, even with the center of Kensington Village, where we are building this. Right along Farmington Avenue, Chris just mentioned, we had 30-something ribbon cuttings all over Berlin. People in anticipation of what's happening, are not waiting for the clouds to move out and the sun to shine. They're beginning to plant the seeds. We have opened 30-something businesses, anything from retail to restaurants to gymnasiums to gift shops, you name it. It's a variety of different operations, because people know once you have this walkable, nice town, that they're going to be part of that. So like I said, I'm coming a little bit late to this party. Just a couple of years ago, a lot of the groundwork was done by Chris Cedge and Jim Mahoney and others who really worked with the state and all the different agencies to make this happen. So I'm excited to be here, and there's a lot of opportunity. This is just the beginning. When the center comes together right along Farmington Avenue, we could see a lot more commercial real estate development happening.
Great, thank you, Arosha. Yeah, very excited that we actually, two locally owned coffee shops, a brewery have opened there, and a lot of it is because of the investment from the state. Tony, if you could talk a little bit about Newport, and maybe even mention why Berlin, because I know you guys have made a number of investments here, not just the big project, but just talk a little bit about kind of who you guys are and why Berlin.
Yeah, thank you, Chris. Firstly, to start off, Mark Lovely and I, Newport Realty Group, we are extremely bullish on Connecticut. We don't have a lot of patience or time to listen to the naysayers. We remain very nimble, and we think the naysayers kind of hold us and everybody else back. So we kind of plow right through that. But in terms of our decision and reason for investment in Berlin, as private developers, we have choices of where to spend our time, and just as importantly, our money, where we think we can provide a successful development, not just from for a profit perspective, but for the community and for the residents. We have to recognize the amount of time and effort and money spent by the town of Berlin over the years to get these particular properties teed up as part of the transit-oriented development. So we understand, and we will never forget how much time and energy that took. The town got it done. It teed up a piece of property or multiple pieces of property, that we participated as part of an RFP process. I think we're one of 5 or 6 bidders. We really wanted this project. Mark and I know Berlin. We both live close to Berlin. I'm going to go back to what I said earlier about having choices of where to spend our time and money. It was such an easy choice for us. Once we were selected, and we were blessed to be selected to be the preferred developer for this transit-oriented development. In terms of Arosha, I think came into town right after we had executed the letter of intent to purchase all the properties. And our first thought was, all right, now we have to train somebody new or vice versa. It was an absolutely seamless transition from one town manager, to the next. I think Arosha also made a few comments about, some of the hurdles, maybe challenges, maybe some of the headwinds that we've experienced, along the way. That's going to happen with a project with this much and this many dynamics. And I will comment that the partnership that Newport has with the town, we just kind of held hands and just blasted through all those headwinds to never miss. I don't think we ever wasted or missed any time because of a headwind. We figured it out and we proceeded through it. So we're excited to, talk about our investment. Our first building is under construction. Plans are just about completed for the second building. As kind of a special note in addition to our investment in the town of Berlin with the transit-oriented development, we also purchased an existing property in town, kind of languishing, a mixed-use development, 16 apartments, about 8,000 square feet of commercial space. We kind of did our thing there, put the pedal to the metal, and we've since, in about 14 months, leased up the 8,000 square feet of commercial space that just kind of languished there for a while. For a couple of reasons. One is it was an investment for us, and we had to get the spaces filled to get a return, but also just to show the town in another way that, hey, Mark and Tony, Newport Realty Group, we're real. We can execute and get these spaces filled. In terms of the multifamily, we see that market very, very strong in probably most, if not all, communities in Connecticut, but we really see it with an exceptional level of strength in Berlin for a variety of reasons. We've not seen a lot of new supply in terms of multifamily in Berlin, so we do like to see that kind of key component, to the development. We definitely cannot forget, being born and raised here in Connecticut, we're used to driving our own cars everywhere. We cannot forget the amount of initiatives that have been put into place and that continue to be put in place. And I mentioned it earlier, Time for CT, the most recent initiative by the governor and his team. Public transportation, really, really key to us. Our success stories, we've got several tenants that live in our building right now, existing building that we have, that commute to New York City, not on a regular basis, but on a basis when they're needed for their office. So, I'll kind of wrap up what I just said by saying, we are very bullish on Connecticut, very bullish on Berlin specifically, and several other communities, primarily because of what we see happening from a state and local perspective.
Great. And a quick background on it is the project essentially is on a piece of land that the town actually owned, recently sold to Mark and Tony. There were some brownfield issues. We had gotten $3 and $4 million in state assistance brownfield cleanup, monies from OPM, and when it's done, it's going to really help to enhance our Kensington Village with 76 market rate apartments, 19,000 square feet of commercial, retail, and restaurant space, and it fits for what the vision is overall in Connecticut. Commissioner Lehman, I don't know if you could share an example of other communities or projects that you guys have looked at either on the rail line or the busway that you've seen that have been important for your organization.
Yeah, I think for us, I mean, there's a number of them. I would say, when I think about where the biggest impact's going to happen, on the state, and why don't we touch? Tony mentioned, the governor's announcement 2 days ago as it relates to rail. And for those that didn't see it, the initial goal is to speed up rail service from Fairfield County along the New Haven line. And for those that don't know, the New Haven line is the biggest commuter rail line in the country with 125,000. Now this is pre-pandemic. We'll see what the structural shift is, but 125,000 passengers per day. And the goal is, within a year's time to decrease the time to Manhattan by 10 minutes. And that's conditioned on $8 to $10 billion of investment. So we'll see what happens infrastructure bill wise from the federal government, but then to continue to invest after that 12-month period and cut an extra 20 or more minutes off those commute times, which, just haven't gotten shorter. But if you think about investments that the state has made and where the state has kind of focused some of its efforts, probably the best example of some of what you've seen is in Stamford, actually now. And for those that aren't familiar with Stamford in the southwestern portion of the state, you've had considerable investment from both the private sector as well as assistance from the state in the forms of brownfields and other infrastructure help in the Harbor Point and South Stamford development, where you've seen significant increased density and multifamily. To Ryan's comment before, you've absolutely seen more from a multifamily perspective and a straight commercial perspective interest in that market from institutional investors. So, a lot of what you're seeing in Stamford is what we'd like to see replicated in places like Norwalk and along that line, Stratford, all the way out to New Haven. You're seeing in Milford as well, where again the state is looking to assist private developers and fill the capital structure where it's needed. But in places like Stamford, you're actually seeing less of a need right now because the numbers do pencil out from a market rate perspective on many of the new residential that's going in. And the goal from our perspective is to continue to enable the density in our small cities, because one of the big takeaways from COVID, candidly, Chris and team, is it wasn't cool to have a smaller mid-sized city before. It was cool to be in Boston or New York. And we just think that shift has happened. And again, I would argue, and we'll see the data this year, but last year there was clear migration into places like Stamford and New Haven, Hartford, Berlin, et cetera. And I think we're going to see more of that.
Great, thank you. And Ryan, I know you're involved in a lot of different projects. I don't know if there's maybe a project you can highlight in Connecticut or even around greater Boston area that you've seen where maybe the investment into rail or other transportation has really maybe played a part to make it a more appetizing project for Northmarq.
Yeah, certainly. One that's top of mind that I can speak to that I think will translate down in Connecticut, and we're looking at a few in Connecticut, but a project in Weymouth, Massachusetts, which is located along the commuter rail. It's about 3 stops outside of Boston. And it was a tired town. It has a lot of medical, but not a lot of residential. And a developer identified a parcel that had some environmental issues, went through some remediation, but delivered 150 units there, and it was very appetizing to a whole multitude of lenders, both on a national scale as well as the community banks. We were able to get very high leverage construction financing done there for this client, and the leasing velocity has been great since they received C of O back in May. And there's a ton of interest on the takeout, but what it's done for that community, and same thing, a lot of the residents of the building, they take surveys and they poll, and we're seeing that it's single car households, whether it's new families living down there looking to get a little bit more space, and to David's point, we're seeing more and more people looking for a little bit more space, and Boston's become a very congested city, and when the pandemic hit, I think a lot of people realized that you get a lot more value outside of city propers, and as these rail lines expand, and the quality of life in places like Connecticut, and I'd say to kind of coupled with that point is the fact that we don't know how many days a week people are going to be going back into the office, and the rail lines will certainly make those commutes easier. But I certainly don't think that anyone is going to be voting to be back in the office 5 days a week. And I think that they're starting to see that maybe the recipe to success is a 2 to 3 day. With that, a lot of people are going to look to see more from these developments that are outside city propers to get a little bit more space, access to communities and downtowns and robust areas where, you're not facing crazy rental rates. Just to put things into perspective, in downtown Boston, rents on new developments are probably in the $575 to $650 per square foot per month. So if you rent 1,000 square foot apartment, you're paying $5,700 to $6,500 a month. Whereas projects we're looking in Connecticut, are penciling out in that $250 to $3 a square foot range, which, you get a much bigger unit, you get a lot more space, you're saving a lot more money. And, wages for businesses in Connecticut are comparable and competitive with Boston. And certainly cost of living is, drastically lower. So I think there's going to be a shift. And that's why I too, Tony, am very bullish on Connecticut.
Wonderful. I know that many times people think of TOD and they think of developments, and they oftentimes, great developments, but New Britain and Meriden and Hartford. But I think it's important also, if you look at projects like the project in West Hartford on Newport, I think that was about 120 units. You look at the project Montgomery Mills and Windsor Locks, I think the model's changed dramatically from apartments mean school kids to now being apartments being millennials, college graduates, other folks that have a lot of debt. And I think it's really seen as an area of great growth in Connecticut. And I know in Berlin, we're excited to go down this road, particularly with the mixed use, because you get that balance of the commercial and residential. Tony, I don't know if you want to talk about a couple other projects you've done, not necessarily in Berlin, but I know Newport is involved in a number of different areas within the commercial real estate world.
Yes, certainly. We recently finished the development and construction of 25 upscale townhomes in West Hartford. I think we closed our last unit in November of 2020. We also identified a parcel of land, it was several years ago that, had some connection for the most part to fast track, although a bus system, but a pretty lean and efficient bus system, to connect folks to, a variety of markets, even to a train if necessary. So you can kind of see a little bit of flavors. We like to go into markets where where typically the demographics are strong. We see a chance where we can enhance further commerce of a market and try to take advantage of some of the infrastructure that's not just there today and has been there for a million years. I say that tongue in cheek, but a lot of our infrastructure is old, but also looking forward to infrastructure that's, planned and or, thinking about being planned. For example, CT fast track, the Hartford line, et cetera. We also invest and develop, medical office, retail, with also those same types of flavors and amenities that we need, to create that commerce.
Great. I'm going to transition to some degree to look more about maybe some kind of trends you've seen in commercial real estate, particularly as things are opening up in COVID. I know one thing, and someone can feel free to take this if they'd like, was particularly with changes in the Transfer Act. I know that was a big deal, and many people worked on that for a while. So, Ryan, I don't know if you could talk briefly about kind of things that you see maybe commercial real estate wise that you see changing, or maybe some trends from your side of the table.
Yeah, certainly. Obviously there's one big component that, it gets taken into consideration when looking at new developments and, environmental lead time and how long the cleanup process is going to take when, our clients are looking at new development opportunities and trying to take some, blighted sites off of these towns, payrolls and start to generate some income producing assets. So I think that, and I don't know a ton about this. I just read the recent articles, but, just in speaking with a few of my clients, I recently financed a project down in Stratford, Connecticut. It was a 375,000 square foot spec development of an industrial building on a brownfield site. And that project, took a year and a half to get through the environmental remediation just to get to a point where they were shovel ready. And, lead times like that, certainly impact and hurt deals. And coupled with the fact that, we've seen a rising material cost, building costs, and labor costs, trying to pencil out and make deals work and, get through those hurdles. I think that everything that the state is doing to lift some of those regulations on the Transfer Act is just going to help drastically. Land costs around these parts, there's not a lot of developmental or developable parcels left and remaining. And I look at a state like Connecticut that has, a lot of great land up and down 95, up and down 91, across 84, Route 9 corridors, certainly in Berlin. We see a lot of projects up in and around that Windsor, in particular industrial. And where these, projects are going to go, it's, land has gotten a lot more expensive up this way. And there's a lot of good land that I see available in Connecticut to be developed. And I think that, anything they can do to assist, developers and getting through those environmental issues with the all of the technology that we have today to bring in clean fill and clean these sites and lay slab and the different types of ventilation that they can put into these projects, I think is going to be drastically helpful and allowing more development to go on in Connecticut as land gets scooped up in other areas. So
Chris, I'm happy to jump in here for those that were not deep in the Transfer Act, it is an antiquated system to basically check property transfers to ensure there isn't contamination. And Connecticut and New Jersey were the only two states that had it. As Chris alluded to, we got rid of the Transfer Act last September. Now it's going to be a process to move to a release-based system similar to what Ryan, you guys have in Massachusetts. It's going to take us 2 years, maybe a bit longer. There's currently a working group that's meeting on a regular basis to work to establish what those new regulations will be and what that regime will look like. But in short, it's going to be a you spill it, you clean it up type concept, as opposed to this, arguably ambiguous and uncertain process. And Ryan actually was at that site in Stratford 2 days ago with the governor right across the street. So it's good to see the construction happening there on that industrial facility. But we don't want to slow things down, and we want to provide more certainty. So the elimination of the Transfer Act is going to do that. While we're waiting for the new release-based framework, you have a Transfer Act where less properties are going to get caught up in it, less are going to be considered an establishment. So it's kind of a double win, if you will. But we do think that's significant to let investors know, Connecticut is focused on making it easier to invest, not harder or more uncertain.
Great. I know under your leadership, David, that the DECD has really maybe expanded what type of projects it'll look at. I don't know if you've seen different types of projects, kind of what's coming down the pike during COVID, coming after COVID. And I know that there's a great creativity from yourself to the governor's office to look at all aspects of a project.
Well, yeah, we'll look at any, and I alluded to 101 College or mentioned 101 College before, but that's an example, and that is something we're going to try to replicate, whether it's in the Hartford area or Stamford or Waterbury. But a true partnership where the state is, depending on what the need is and kind of the economic impact, but call it 5 to 15% of the capital structure overall, where we think it can have a real transformational impact on the community. And that's not just from a housing perspective, but for example, at 101 College, there's between 50 and 70,000 square feet of incubator space that'll be maintained for a 10-year period. And we think in terms of business formation and job opportunities, that is really going to drive it in what is a life sciences dominated market there in New Haven. So stuff like that, physical investments, where the state can fill a needed gap to get a project over the finish line. We want to look at that type of stuff, and we want to replicate that because we think even our smaller cities and bigger cities for that matter, to get to that critical velocity and the density you need from a housing perspective and a job opportunity perspective, those investments are going to need a little bit of a push. So we're very open-minded and being part of the solution as long as we think the ROI is there on the state investment.
Great, thank you. And Tony, I know you come from a different perspective in the private sector. I don't know if you could kind of talk about what maybe the type of project you're looking at. Are you seeing more communities with RFQs? Are you looking at different avenues? I know mixed use in Berlin was somewhat of a new venture for Newport, but can you talk a little bit about kind of where you see things going from a commercial real estate perspective and maybe things you would look at, or even if a community has an idea, if it might be of interest to Newport or other folks in the private sector?
Yeah, we've submitted several RFPs since our engagement with the town of Berlin, and actually we were nominated along with another business partner to redevelop the old White Oak property in Plainville. We're very early in the process, but also a brownfields scenario that needs a lot of participation both by the developer's side, the private developer side, and by the town. And just to maybe highlight of what Commissioner Lehman had just said, we also have to understand the ROI on a project. And for a private developer to try to do everything in terms of a brownfield site, with the staff and the time and the, connection to the state is very, very difficult, if not impossible for us. We would probably pass on a project if we didn't have a town or a city, clearly support, become partner with us, just like we did in Berlin, to where all the behind the scenes work in terms of the environmental work, kind of gets done and prepared by the town, and to allow developers just to come in and develop, which is what we do, we think we do really well. So, in Connecticut, we don't have a lot of 3-acre parcels, flat, ready to go, no environmental matters, located next to an interchange exit or a mode of transportation exit. So we have to really dig deep into find the developable properties. And sometimes we find those that are kind of hidden, or they have inherent, maybe environmental matters. So in terms of, where we look and where we want to go and what's the state of the commercial real estate market, it's probably as hot as it's been for an awful long time. Connecticut is still very cheap in terms of land costs. Not so much anymore in terms of construction costs. I think, as somebody commented on earlier, maybe that was Ryan, we really, if more than ever, need to pay attention to not so much the land cost, because that was always a common denominator for us, but we really need to understand and keep an eyeball on the cost of construction today. We're starting to see that maybe ebb a little bit, but if those prices don't come back into check again, I think Connecticut maybe won't be as reasonable as it was to acquire housing, whether it be a single family home, condominiums, or some of this, multifamily developments. I'm kind of blown away by some of these, per square foot numbers in Boston, 575 to 650. My first thought was, man, can we get that here in Connecticut? I don't think we want that here in Connecticut. I think we're all very comfortable. We like that. We're penciling, 175 to 250, maybe as much as $3 per square foot for our multifamily. We kind of like those numbers, and we kind of like the way that works for our residents.
Terrific. And I would love you to talk a little bit about, I know it's not necessarily only commercial real estate, but you're working right now. You had mentioned it about kind of the state's plan of conservation development. If you could talk briefly about that and how the public and folks in development sector can really assist with that, because those are important voices.
Yes, as I mentioned earlier, the state plan is this broad collection of policies that kind of directs where we want to go as a state as far as development goes. That plan is updated every 5 years. OPM does the brunt of the work to update it, but it is a legislatively adopted plan. But there's an extensive public outreach, public participation. So the folks on this call looking to develop in Connecticut, looking to see, number one, what is the state, where's the state looking to invest? And this will give you an idea of where those places are and what types of development. But as we move towards updating this, your voices are the ones we need to hear. I think it was Commissioner Lehman who was talking about down in Stamford, how properties now or developments now are starting to actually pencil out on their own. And the need for state investment and state assistance is diminishing because those places are now able to kind of grow and develop and stand on their own 2 feet. So it's important to get feedback from folks in this group when that process begins, probably this fall, is how we get there. Another thing I wanted to mention too is that the state in general, particularly DOT and OPM, have spent a lot of time over the last few years assisting municipalities and some of the regional governments in developing plans for their areas, particularly TOD plans. So, Commissioner Lehman again was talking about removing some of the ambiguity with switching from a transfer to the Release-Based Act. Another way to remove some of the ambiguity is to go and look for those plans in those particular places, because you're going to start to see where are those areas that, you know, the municipality, the region have designated for these types of development. Generally speaking, those things have some type of local acceptance or local adoption. So it takes some of the guesswork out of, okay, where do we go? What types of things can we build? You know, how big can we build them? What's the mixture that this town or this area is willing to accept? So it can help some of the developers on this call to kind of pinpoint, here's the type of project we want to do. Where can we find a fit for it? You know, out in the community. And then the other thing I wanted to add too was Advanced.CT. It's a nonprofit business development group. I think it partners with DECD, and they actually have a site finder website, which can also be useful. You can search based on, you know, different sites, different sizes, locations, and it gives you some of the background information on there. So, you know, all those things are good. All those things can kind of help the folks on this call determine where those places are that they want to develop and where to locate their projects. And, you know, just to piggyback on some of the towns and municipalities that were mentioned earlier, you know, Berlin, Stamford, New Haven, New Britain, Meriden, Windsor Locks, Wallingford, some of these places really along kind of the Metro North, the Hartford rail line and the CT fast track are really those places that are, you know, areas of interest, not only from what we've seen development wise, but also kind of from the state's perspective. You know, there's a lot of density, there's a lot of population, and a lot of those places have really kind of learned the value of the TOD style of development, and have adjusted their own internal regulations and requirements to kind of allow for a little more flexibility when it comes to building those things.
Great, thank you, Matt. I'm actually going to go slightly off topic here, or not off topic, but off the schedule. Got a question from my friend Susie Beckman down at Old Saybrook. Anyone on the panel, please share their outlook on co-working or shared workspaces. And do you think there's a demand for that kind of mixed co-working, housing, or similar in what they've seen? And I don't know. I know Tony had done something interesting at the building they purchased, had the vacant first floor. I don't know if you want to talk about that briefly, Tony, and then we can maybe, if Ryan or David have any thoughts on that.
Yeah, just quickly to that point, at the building we purchased, 848 Farmington Avenue, the mixed-use building with the, like I commented earlier, you know, a pretty substantial amount of vacant space. You know, we saw lease up happen relatively quick, but we had about 3,000 square feet that was kind of languishing. So we took a risk, and, you know, just from our kind of expertise and market knowledge, we built 6 executive suites, 250 square feet to 400 square feet each, small kitchen, small kitchenette for coffee, individual restroom, for use for people like what we were strategizing, maybe having a home business as an insurance agency to come in, you know, maybe a realtor. I don't think we finished the walls in that space. We had all 6 of them leased out to individual business owners. You know, we set the lease terms as a full service lease, which means you pay you pay the landlord one check, which is for your rent. That includes utilities and, you know, maintenance and everything else. We are so bullish about that is that we're looking for additional properties, primarily in Sellington at this point. I'm sorry, primarily in Berlin at this point, to do some more of those executive suites.
Great, thank you. And David, I know you are actually, Ryan, it looks like you may have some thoughts on this as well.
Yeah, I think it's been tremendously successful in Boston. You know, I think maybe WeWork's valuation got everyone a little antsy about the co-working space, and maybe COVID shined a little bit of light. But I think that just coming out of the pandemic, and when all these various, you know, large organizations are looking at footprints and where they want to maybe cut back on some of the expenses as they, you know, maybe shift from having, you know, 100,000 square feet in one single office location, being able to you know, maybe rent a lot of co-working spaces in and around places in which their employees would like to live, I think is a tremendous solution. And I think that's going to be, you know, a great opportunity. And, you know, all the businesses and the organizations around Boston that have been doing that, you know, have been successful pre-pandemic. And I think that model will shift a little bit coming out of the pandemic, but I think that there's going to be a huge need for that, and it's going to be, you know, very successful. So.
Perfect.
Hey, Chris, sorry, Dave, go ahead.
No, just and this was alluded to before, but the big question is the structural change around how people work. Is it executive suites that are proximate, or there's satellite offices? We're going to announce one tomorrow in Fairfield County, a New York City company that's going to be expanding. Or do you see a 50% or less type work from home, which is what the state of Connecticut is doing? We just don't know. I don't. It's clear it is a structural shift in my mind. I just don't know how exactly the future of work is going to adapt. But I think you don't want to bet all on one strategy. It's certainly not all back to the office in my mind. It's not all kind of proximate to one's house suites or all work from home. I just think we're going to need to stay really close to the data here over the coming 12 months.
Thank you. And Arosha.
Yeah, I was going to add, Chris, you probably remember we opened a wellness collaborative on New Britain Avenue. I think that's a brilliant model. They have half a dozen therapists, others who provide wellness and other initiatives, that they're not renting 6 different places, 6 reception areas, 6 custodial services, trash pickups. And the space is, if you look at utilization, it's utilized most of the time. Not everyone's there 5 days a week, but they all have their individual spaces and they're all the owners of the space. And I think that's a brilliant model. And I think all of them feel that they could stay in business when they don't have to pick up a large, chunk of the rent and the utilities that they get to pay each month. So I think more of that would happen as people come back, and especially with financial services, law offices, others, they have shown some willingness to share space and have beautiful space with welcoming reception that's clean and that's not closed most of the time. That's another one. If you're just using space and it's open once a week, it doesn't have that much of an attraction. So my guess is we're going to see more of that even in Berlin.
Last question here that we have, which is more financing, and I'll start with Ryan on it, which is, do you see any changes or trends maybe that have happened through COVID, coming out of COVID, and areas of interest to the financing and development community? So do you think there's a trend towards certain things? I know right now one of the big things we've seen, especially with industrial, which is that last mile. I know in Connecticut we've seen a lot of the large buildings distribution, whether it's Amazon or others. Don't know if you can kind of talk about what you've seen, and then we can go to some of the other panelists on what they've seen as well, kind of financing trends, and not necessarily what's interest rates going to do, but what you've seen and what kind of things are appetizing to Northmarq.
Yeah, obviously industrial and multifamily have been the 2 hottest asset classes across the board for all of our capital sources, probably for the last 5 years. And, I think that, what the pandemic sort of taught us is exactly that, the last mile distribution and the need for, these companies and e-commerce to be able to get their goods around the country. And, I think that in addition to that, the sort of the shift, and when you see issues along the supply chain, and when canals are blocked, or now there's cybersecurity threats, and how to move product around, I think that industrial is going to continue to be successful, and it's going to continue to be an asset class that is highly desirable from a financing perspective. And I think same goes to multifamily. I think there's a big shift in home ownership, and not only are we seeing more and more young professionals continue to rent well into their 30s, but we're also seeing a shift in which people that are my parents' ages, in their 60s and 70s, sell their home and rent an apartment in the community in which they might have had that house, so that you can still go back there, and then maybe having another apartment in a bigger city or a vacation home. So I think that there's, a big desire to move towards that. And, I just think that, multifamily will continue to do well. There were a lot of questions coming out of office. I mean, in downtown Boston, we're still probably 10 to 15% occupancy in all of our office buildings. So I think that there is some question marks as to, what the impact is going to be, as Dave alluded to, the shift to, what is the combination of how many people are going to be back in the office. No clue. CBRE and some of the big leasing brokerage firms will tell you that you're going to need more office space because people are going to want to be spaced out. But, I got to think that a lot of these executives are going to be looking to cut down on office space to save in expenses. So, but all asset classes, mixed use, retail, credit tenants, interest rates, in my humble opinion, are going to continue to stay low over the next 5 years. So there's a lot of capital out there from debt and equity, and they're going to be eager to put mortgages on their books just because they're going to be chasing any way to get yield, and they're not getting that in the treasury markets, and those aren't going to be going up either. So I think commercial mortgages are going to continue to perform well. The only thing I will say of note is just there's been a lot of consolidation of community banks, in particular in Connecticut. Some of the bigger banks are purchasing those, so I think that there will be the need for other capital sources to really enter that market. And I think everything's heading in the right direction. I think Governor Lamont's doing a great job to promote and bring back more business to Connecticut, and projects like Tony's project in Berlin are just tremendous to show as case studies to some of these capital sources that these projects are extremely successful, and there's a high quality life to living in Connecticut, and it's a good place to put out money. So
great. And I know, David, that it sounds like the model's changing to some degree where DECD is going to be looking to do more partnering with the financial community as compared to direct lending. And I'd love to kind of hear some of your thoughts on where you see things headed.
Yeah, no, I mean, we can spend a whole nother session on that, but yeah, the reality is I think we want to, the state here, a lot of Lamont's team is kind of has some private sector experience. And I think our view is, we know what we know, but we know a lot of stuff that we know a lot of stuff that we don't know, and we want to be part of the solution as opposed to try to be all of the solution. So whether it's business lending, we're not going to be doing direct business lending. We're going to try to partner with banks or other fund managers where the state is going to make investments. We think that the government absolutely has a role, but we don't think we are the role, and we're not going to be competing with the private sector. We want to complement the private sector, and that's just our philosophy on many things, whether it's again, real estate, small business development, etc. And with the ARPA funds, you're going to see that rolled out over the second half of this year, focus on, again, small business investment and other ways we can incentivize the private sector and municipalities like Berlin and beyond to come to the table with their best ideas, where the state can be part of that capital structure, not all of it.
Perfect. And Tony, I believe you guys actually had worked with a community bank for your projects in Berlin. So I'd love to kind of hear your thoughts on where you guys are with financing, what you're seeing, and kind of the developer standpoint.
Yeah, we've been fortunate with all of our products, all of our projects in the past. We've partnered with local community banks for all of our financing. Requires private debt on from the partnership side, but the scope and the size of the developments have been pretty much in the wheelhouse of our banking partners, which play right into the hands also of our Berlin development. Our benefit there is we're going to do it in phases. I think any banker or lender, if you walked in and said, I'm going to launch this entire development today, that's tough for any market, especially a smaller Connecticut market like Berlin. So our benefit is we're going to go ahead and phase this approach. But I have to say, our banking partner, which is Thomas & Savings Bank, particularly for this development, very robust and very bullish on our development. The numbers, easily pencil out, with the only caveat being this recent increase in construction costs, which, as I commented earlier as well, we should see, we hope to see, and we're starting to see some kind of ebb in those costs. Financing is never easy for any project. It's the strength and the expertise, both primarily financially from the partnership side. But if it's a good project, a good bank or a good lender is going to look at it and most likely finance you. Fortunately, rates have been low for a while. We continue to think they're going to stay low for a while, which will probably help us offset some of those, what we see short-term construction cost increases.
We actually have another question, and I'll start with Arosha. On how the town of Berlin is working with affordable housing, getting to the 10%. We can also maybe talk to David and others about what they see communities in Connecticut doing on affordable housing, providing that, but also getting to the 10% goal that the state has.
Yeah, so I mean, we are fairly fortunate. This is not something that we put on the back burner. We have been working on providing affordable housing. We're pretty close to 10%, about 62 units away. And some of the new developments that we are working both on the Berlin Turnpike have that affordable component in there, and we are fairly confident that we're going to get over it, over the 10% threshold. Again, we're not thinking that this is the 10% and we meet that and then we close the books. And this is something that we want to keep in mind as we have newer developments to try and make it more affordable. And it is an issue. We are trying to work on a senior housing project. These are for seniors who lived all their life in Berlin. They want to sell their house, and some of those seniors are on a fixed income, just on a social security check. And it is important that we find a way to build the senior housing so that it is affordable for them. So it's in the works. We're working with the Berlin Housing Authority, try to work out on the financing, and working with the state and Department of Housing, try to get that launched. It's sort of in the middle of getting all the applications in and getting the funding lined up, but it's a process. It takes a lot of time and a lot of work on the tax credits, and try to line all of these things up, working with different agencies. But we'll get there.
Awesome. I know, oops, sorry, because I mentioned one thing about Berlin. I know most recently we ended up adding an overlay. It was a Berlin Turnpike development zone. And essentially it allowed mixed use, and the Town of Berlin Planning and Zoning Commission actually had a density bonus. If you have a minimum of 10%, you would get a greater density, which I think is a great way to go. Has helped us to make sure it is part of the mix and it's not just all market rate. So David, yes, I know you've worked with numerous communities on this and housing being underneath the ECD.
Yeah, well, there's a couple of things. Then I apologize. I need to meet with the boss here in a second, so I'm going to need to drop a little bit early. But just following up on Arosha's point, I think the affordability issues around housing, that's not unique to Berlin. It's not unique to Connecticut. Obviously, that is a countrywide issue. I do think there are some common sense things that the state needs to be doing, because the reality is we are a small state. We're one of the most densely packed states here in Connecticut, 5th most dense overall in terms of just the amount of people relative to the land. And candidly, there are lots of Connecticut. We don't have a tradition in a lot of our localities of encouraging dense development. And I think that framework needs to change. We could talk about affordability, but I really do think there needs to be a shift in mindset towards multifamily, towards more dense development, because whether that's capital A affordable or not, just more housing and the availability of more high quality, newer housing, I just think that's going to keep prices in check. Candidly, and we can debate that. We obviously need good paying jobs, and that's a big part of the puzzle. But I think we need to seek growth, and we need to seek development a lot more than we have in Connecticut to make sure that our economy is going in terms of housing in particular. And again, there's no silver bullet, but that is a shift that I think a lot of Connecticut localities need to make. One thing I'll just point out for maybe some of you follow this, but it hasn't been that well publicized. In part of the legislative session that just happened, effectively ancillary apartment, an in-law suite, whatever you want to call it, that was approved as of right at the state level. Now towns have the ability to opt out, but trying to make it easier if someone wants to create an apartment or a dwelling on their existing site to increase some of the housing stock. And again, from an affordability perspective, we just think that helps. And we do think that's really important to the economy, because expensive and unaffordable houses, that is a really, really bad recipe. So I just thought I would add that one point.
Perfect. I don't know, Ryan or Matt, if you have any thoughts to add on that.
We do have experience in it. I think that ability to build the, affordable housing or high end or market rate has been, more easily done than that sort of middle market housing. I think that, we've done a lot with LIHTC and tax credits, and in Massachusetts, we have a 40B program that allows for, basically zoning approval for a new development project, so long as 20% of the units are deemed affordable. So that's, promoted more affordable housing. I think that, we're sort of losing that, how do you build to the middle income? And as Tony can allude to, it's almost impossible to do so with where material costs, land costs are now. I foresee that as being a bigger problem than adding affordable housing. I think that, through the LIHTC programs and these development initiatives, I think that you're able to bridge that gap by filling it with other equity and forgivable and sub debt on these transactions. I think that, we're going to see a problem across the country is just, how do you create that stock and inventory for, working class Americans sort of in the middle? affordable developers have gotten very good at what they do. It's a different arena, different world. And, you know, when I get on the phone with their attorneys, they're a lot more intelligent than I am, but they can figure it out, and they're able to deliver these, you know, beautiful communities all over the place. So it's, you know, I think that will continue to flourish, and hopefully, you know, get the stock and that inventory in various communities up to levels that make sense. I think that, you know, where we're going to see that void is in that that middle income housing, especially as, you know, these 60s, 70s, and 80s vintage apartments just get too tired to renovate, and, you know, old brick construction, and, you know, they're very inefficient. So how do we deliver that next inventory and the next stock of housing is a big question in my eyes. And, you know, I'm not in the private development sector. I'm just trying to finance these projects, but you know, that's at least what I see from the outside. I either see an affordable project, or I see a you know, market rate, or what have you, luxury type product. So there's nothing really in between. So I think that's going to be an ongoing problem moving forward.
Gotcha. Rick, looks like we have a couple more questions. I don't know if we have time to hit them or if we should hold off. What's your thoughts?
No, we have time for those. I have a few questions as well. So yeah, go ahead with those questions. We have.
Sure. I think this one's probably more to Tony and Ryan, which is, what do they see driving all the convenience store, gas station development that we're seeing on corners? And are you doing any from a Newport side?
I guess last first, we're not in the development business of gas station and C-stores. You know, what's driven that? You know, although we'd like to see more public transportation be used, we're still spoiled by having our own car. And like any other convenience, whether it be, you know, a retail convenience in terms of location, or even a medical office urgent care in terms of its convenient location, you know, gas station and convenience stores kind of service that same convenient, you know, flair. You know, they kind of have to be in your way, so you stop by for the fuel for your car, or for a snack in the C store, a convenience store. Yeah, I think it's just like any other retail business, or any other business. If there's a demand, there's going to be supply to fill that, you know, to fill that demand.
Gotcha. Rick, you had a couple other questions.
Yeah, and just to go back to what Tony was saying on the C stores, my uncle always said people are always going to have to eat, so you're always going to have some kind of a supermarkets, or, you know, place to get some kind of food. What is the state doing about the excessive tax rate? Now, I'm not sure if anyone can answer that, but that's a question that came in.
Yeah, that's probably a question for Commissioner Lehman. I don't really have much of anything on that one myself. I don't think anybody else is in a position to talk about that at all in the panel. Yeah,
no, I figured that, but I figured I'd throw it out there because it was one of the first questions that came in.
Hey, Rick.
Yeah.
Not to interrupt, you know, I think Governor Lamont's plan is a good one. Not to increase the taxes, but bring more people, more taxpayers into town. I mean, that is the answer to that. You know, that might eventually bring down the curve. But if you have more residents living here, more businesses, more commercial space renting out, more industries coming in here, try to keep the people in Connecticut, bring more businesses, bring more people here, especially with this, you know, don't waste a, you know, good crisis. Unfortunately, what happened with COVID, if you have an opportunity to bring more residents to live in Connecticut, commute to New York, or commute to Boston, that's the answer. So let's try to make it work. All our towns can play a role in that. And having more people contributing to the pool will actually help everybody. So, I mean, I think his vision is a good one. And if we all work towards that, we can keep the taxes low.
Looks like Tony may have some thoughts as well. Oh, you're muted.
Relatively off subject, but we talked a little bit about, you know, the challenges of affordable housing and some of the zoning matters that affect the approvals for affordable housing. You know, we have seen a recent shift. You know, we work in a lot of communities. You know, right now I think we have applications in for a variety of projects in maybe 4 or 5 communities. And we've seen a marketable shift over the last 18, 24 months of, kind of the strategies and the makeup of zoning, planning and zoning commissions, wetlands commissions, zoning board of appeals commissions. We've seen it, not every community, the several communities that we're in, we've seen some pretty tenuous and more than usual challenges getting through the planning and zoning process. Typically, we're really good at planning and zoning. We know how to navigate through, and we do get there. But time is money for us. We've experienced delays. We've experienced some slander, unfortunately, at some of the commission meetings. Probably not a problem that we could solve today, but from a development perspective and a broker perspective, it's another thing that we have to pay attention to as we try to, tee up and dish up deals, for different towns and communities. I am not including the town of Berlin in that conversation. It's been nothing but seamless and positive, but there's several other communities that we're involved with that it's very difficult to navigate through that process.
Okay, let's move on to another question, and this is probably due to the pandemic. Has Connecticut seen an influx of people from Manhattan or just New York in general, as has Long Island and New Jersey? If so, what parts of Connecticut have people chosen to move to? I don't know if you can answer that question. I'm sure it's all over.
From what I've seen and heard, I think it's mostly Fairfield County and to some degree up in New Haven County. I don't think a lot has happened as far as mid-state, Wallingford, Berlin. I believe downstate there's been quite a bit and a lot of pressure on the housing markets down there. I know even up into Shelton and into some of the communities surrounding New Haven, from what I have seen. Again, I think it's more of a stay close to New York, but still be in Connecticut, which has been tremendous. I mean, I know too, the housing itself seems to have gotten quite crazy, especially on single family homes in many communities, which may be partially that, but also the fact that I think that people also made a lot of large investments in their homes during COVID. Everybody got a lot of time to see how bad their driveway, their front porch, and their roof looked. But I mean, that from what I've seen and heard, that's really the biggest push has been into Fairfield County.
Well, throughout New England, we've seen a lot of the coastal cities and towns have had an influx of people that have moved to them only because of, now you have the outdoor activities as well as the water activities that people can enjoy. So I know in Rhode Island and Maine and New Hampshire, they've seen quite an influx in the coastal areas. I don't know if Connecticut has seen that. Another question, and I think Tony answered this, the cost of construction affecting new projects and how, and I think we all know the answer to that. We'll move on to the next. Have you anticipated changes to the market that have not materialized?
It's a great question. I think probably a different answer to that question 18 months ago versus what it is today, just as we've navigated through the COVID pandemic. As developers, we're pretty good at strategizing and doing a pro forma, but we only do that in markets that we really understand. Have we been disappointed with pro formas and or strategic plans? We haven't thus far. One other positive thing about Connecticut, unlike a California or a Florida or even a Texas, our peaks and demands are pretty level. We don't see huge swings. As developers and as investors, we don't like those large swings. We're okay with the small kind of jiggulations as we go along. So maybe that's one of the one of the key things of what we plan and what actually happens. Our plans do come true because we don't have those huge swings.
Anyone have anything to add to that?
I'll just, jump in and say, I'm fairly young and have seen a pretty successful commercial real estate market since I started my career, I guess about 12 years ago. So it's, I've seen a lot of pro formas meet the mark, and I haven't seen too many projects that have missed. I certainly think that, there were a number of projects that were put on hold, and in particular in retail and hospitality, as the pandemic sort of hit last year. And, they're just starting to rethink about, where they want to do with that, or if there's a shift and change. But, I think that we've been, and I think interest rates and, what I do has a large part of that, and the availability of capital and lending sources. But, a couple times maybe interest rates and where they've gone have bailed out on acquisition and development sides, where you're maybe picking up 50 to 100 basis points because interest rates kind of came down from maybe mid fours close to 5, I'd say a couple of years ago, to now we're seeing a lot of rates in the 3s again, and even cracked a couple 10-year deals in the 2s. So I think that that's maybe bailed out a couple projects, but for the most part, we've been pretty steady Eddie, and we've been on a very good run for commercial real estate in all markets that we've done business. So it's been, a very fortunate time to get in the sector, but there's something that none of us see is probably coming in the near future, and hopefully not too near, because, it's been, good for developers and good for owners, operators, and those of us in, service industry. So.
Well, we're coming close to the end. There's one question that came in that, I don't know if anyone can answer this. Can anyone speak to the regional differences, particularly Southeast Connecticut and New London County? Okay, I guess not. Well, there's another question. This was, I guess, addressed to me. Someone wanted to know why this meeting was virtual and not in person, and I'm not sure if they're aware that we had a pandemic that was going on, and we're just coming out of that right now. So right now it's we're still doing some virtual events. So hopefully in 2022 we'll start doing the live events again. We do anticipate doing some live events towards the end of this year. But we have done live events in the past in Connecticut, so we do plan going forward to do that again in 2022. I want to thank everyone for attending today. I want to thank our panel. Great job. I want to thank Chris Edge from the town of Berlin for moderating. And I want to wish everyone a great day today, and hope to see you at some of our future events. Thank you very much.